Well, for more, let's bring in Peter McNally, Global Head of Sector Analysts at the research firm Third Bridge. Thanks so much for being with us on the programme. As we say, G7 finance ministers saying a little earlier that they're prepared to implement necessary measures, as they put it, in response to surging oil prices. Now, those oil prices, they have dropped somewhat since Donald Trump reassured the world, in his words, that, the US was very close to winning this war. Difficult to know exactly what's happening there, but talk to us about what the G7 nations are actually likely to do, in your view, Peter.
Well, I think they want to wait and see first and how this plays out. Right? It's the duration of the outage in the Middle East is going to be the biggest factor, and that's something we still don't know yet. And it seems to change every 12 hours. Last night, the election of a new supreme leader was viewed as very hawkish. And for a longer period or a longer conflict was likely to occur. But now Trump in the last few hours seems to have indicated that things will calm down. So I think it's a little early for the G7 countries to act with strategic reserves. But, those reserves are lower than the last time we had a supply crisis, 4 years ago after the invasion of Ukraine. So more wait and see.
And Donald Trump as well expected to perhaps review as early as today a set of options to tame oil prices after making those comments a little earlier. How do you exactly expect him to act? Do you think that, what kind of options are open to the US here?
In the short term, very few. I mean, the only thing that's going to regulate it is high prices will kill some demand. This was supposed to be an oversupplied market in 2026 for sure, but now that is cooling off quite a bit. U.S. oil production is kind of flattened out here over the last 12 months, and drilling activity is down pretty significantly because the prices have been weak. But all of the world's spare capacity has been in the Middle East, and now that's effectively off. And even the base of production is now being called into question. So really, in the short term, there are very few things that politicians can do to drive the oil price down other than make demand go lower.
And even in the highly unlikely event that the war were to end immediately, how long would it take then to return to normal deliveries?
Well, that's the thing that we don't know just yet. And I guess if there are two questions that we still have is what are the export capabilities for oil in all of the Gulf states, and particularly Iran, it seems to be, and then how quickly natural gas production can ramp back up in Qatar. And that's going to be a bigger issue for power prices, particularly in Europe. Europe has become more dependent on importing natural gas from outside the continent, both here where I'm in the US and from the Middle East. But it's going to take certainly at least a few days, if things do calm down, to have a real better sense of what export capabilities look like.
And Peter, the EU saying there's no imminent oil supply shortage. All of this, though, it really underlines how closely energy security is actually tied to national security. How concerned should we be here in Europe?
Well, in the short term, inventories are plentiful. If we look across the OECD, I mean, today it's about 2.9 billion barrels of crude oil and refined products. Compared to where we were 4 years ago when Russia invaded Ukraine, it was only 2.6. And at that point, there was talk of $200 oil, and I think the price of Brent reached $139 intraday. We're just not in that tight of a situation, right now. So, leaders at least have a few weeks to figure this out. But if 15 million barrels a day don't get through the Strait of Hormuz, that excess inventory that the developed world has will evaporate pretty quickly. Probably in about 3 weeks. So, so far that will be the big thing to watch.
And how diversified then is the global oil and gas system overall compared to the way it was back in the 1970s, for example?
Well, the oil system is certainly far more diverse. And one of the big drivers, of the oversupply in recent years would point you towards South America. Brazil, Guyana, Argentina are all growing. the United States had decades of declining oil production that started to reverse in 2009, and now here we are. We're the largest oil producer in the world. Canada has continued to grow, and they have more export options. There's some exciting things coming longer term in West Africa that could be interesting. So the problem is, though, so much of the Middle East oil goes through one choke point there in the Strait of Hormuz, and it's still important for global markets. Most of that oil ends up in Asia, but it really is a global market. And in the short term, it's just difficult to manage the logistics when something like this happens, frankly, out of nowhere.
And do you think then that Asian buyers would be likely to outbid Europe, for example, for any gas that does become available?
Well, in towards the end of 2025, China in particular had been stockpiling oil. As noted earlier, inventories have been climbing for some time now, and that's one of the reasons we've actually had low prices and lower drilling activity over the last few years. And again, the market was expected to be oversupplied. So in the short term, there is a cushion of inventories, anywhere, but that can quickly reverse given what's been going on in the Middle East.
And Peter, how exposed is the United States to an oil price shock? Donald Trump coming under a little bit of criticism for failing to refill reserves.
Well, the oil price, will flow through transportation costs, and it's part of a bigger affordability question that we have here. I mean, electricity prices, which are not driven by the price of crude oil, have been going up, and tariffs have had an impact on food here in the United States. So the cost of driving is certainly going up in the next few weeks. We're already seeing it at the pump, and that's really important to consumers.
Peter, we'll have to leave it there for now. Thanks so much, though, for being with us on the programme this evening. That's Peter McNally, Global Head of Sector Analysts at the research firm Third Bridge.